My name is Arthur and I'm currently 21 years old. I'm a penultimate year student majoring in economics in NTU. I'm also the vice president of my school investment club. I'm also an investor. After I graduated from my high school, there was quite a long period before I entered university. By chance, I read out on the Forbes magazine and they list out all the billionaires in the world. So I got started thinking, what really differentiates between the very rich people and normal people like us? After giving it some thought, I realized that to be rich, usually they start from investing or starting a business. Since starting a business is quite a daunting task for a young person for me at that time, so I think investing would be a good way to start. So I took out my savings and invested in my first stock at the age of 19. My start investment amount was about $3,000. My first stock is a media company in Malaysia. Yeah, so that company has a very strong cash flow and quite a stable business lah. So I would think as my first investment, it will be quite safe, you will not lose all my money. Yeah, so this is my first stock. After I got started investing, I also read out on some trading material. So I think it would be good to try my hand out because trading usually can give you a faster return. I realized that trading actually is a totally different games with investing. I blew my whole account in trading. It all happens within 2 weeks. Initially, for the first week, I did quite well. I almost doubled my account within 1 week. But as you all know, this kind of return actually is not sustainable. It's quite unlikely for you to have such a high rate of return in 1 week of time. So after that, next week, because high risk, high return, high leverage is a double-edged sword. So the leverage worked against me. So yeah, the whole account got wiped out in one trade. When I lost money, it definitely is a very challenging period because the emotion will keep come and haunt you. It also distract me from focusing on studying also. This definitely is not a good period, but time will heal you. So after some times, I reflected that this is a good experience. It's better to make it earlier than make it late. I believe that a lot of investors, they have beginner lucks. After that, they think they are very good. Luck will not get you too far. So I reflect from my mistake and I decided not to trade life before I really master the skill of trading. So now I only focus on investing. So this is how I learned from this experience. One thing I think is the emotion part and the psychology, because all these technical analysis, it can only serve as tools, but if you are the one that's using the tool, cannot manage it properly, it's pointless. So a way is to keep your emotion under control when you're trading. So this is the part I'm still mastering. Another lesson I learned is proper risk management, because no matter trading or investing, it's a marathon, not a sprint. So you aim to make a very outsized return in a very short amount of time. It's actually, most of the time, it's not sustainable. So a risk management skills can get you to run this marathon. My investment philosophy has evolved from time to time. Currently, my investment philosophy is more about buying company that has been over-punished by the market, but they can still perform well in the long run. I invested in mainly stocks in Singapore, and I also have some precious metals as a portfolio insurance, because I realized that precious metal, especially gold, is a fear investment asset class, because gold will go up when people are in fear. So it is to serve as a portfolio hedge. I have less than 5 stocks in my portfolio because I believe that risk come in 2 ways. One is volatility and one is uncertainty. So to me, that if you are investing in a very good company, volatility doesn't matter that much, because if you know this company is a good company, it will continue to grow in the long run. While uncertainty, you really understand the company very well and you believe the company can still perform in the long run, then the risk from uncertainty is vastly reduced. My best investing experience will be last year in the REITs market in Singapore, because last year at the beginning of the 2012, the QE3 has not started yet, but the world has been in a low interest rate environment for a very long time. So I foresee the market will have a very yield chasing behavior. What does that mean? They want to go for those stable and high return. And the Singapore REIT market, most of the REIT offer a very attractive dividend yield, which is about 6 to 8%. And this is actually very attractive for a lot of the investors that are seeking a very stable return, because most of the bond only have 3 to 4% return. So I perceive this will be a very good investment. So at the end, all the REITs perform very well during 2012. This year, my portfolio is up more than 30% because I realized some profit I made in the REITs investment last year, and I also try to buy some company that's trading at a very attractive valuation, such as Wilmar and ICBC, which is the largest China bank. Because commodity company since last year has not been doing so well, but I foresee this trend to reverse soon, maybe not immediately. So my strategy will be to catch this trend before that happens.
I think he's adopting a very good strategy. I think Arthur is moving into places where a lot of people who will agree with him. For example, finding stocks which are undervalued, finding stocks which have been thrown out of the window, the baby with the bathwater. Let's go and search for that baby during crisis time. I think investing in stocks with dividends is also a good diversification of these kind of strategies within the stock environment is good. The main thing is having a money management system in place. He then applies these to the various markets in very much the same manner. Of course, there are some tweaks. For example, in the forex markets, the stop losses may be tighter because of the volatility. In the equity markets, the stop losses may be wider because it's less volatile. So basically, to ask the question when he will be ready to go back into the forex market itself is a question of when he feels that his system that he has in place is finally matured enough or can be tweaked in order to handle the volatility and the intricacies of the forex market. It may not be the exact same system as the equity markets, but he can actually start building the system with the equity markets and then try and tweak it to customize it to the forex markets.